You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is 1 p.m. Central, 2 p.m. Eastern. Do you know where volatility is? Well, maybe we can find it together because you tuned in to the right show. This is Volatility Views, the premier program for volatility traders. My name is Mark Longo. I will be your guide for this 1-hour journey through the world of all things options. We'll talk spikes and VIX and VXX and the futures and the term structure and all that good stuff, as well as a bunch of other stuff, probably some earnings vol and a few other fun things to answer your questions. Look into the future of volatility. All sorts of good stuff in store for you. However you listen live after the fact, make sure you keep those questions, those comments coming. If you like what you hear, make sure you leave a review to keep new folks discovering this program and indeed the network all the time. They need it now more than ever. So keep that flood coming. We do love hearing from you guys. And joining me on the old program today, first off, he is the greasiest of meatballs, Mr. Mark SEBASTIAN from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program, sir.
Hey, it's good to be here. It's an exciting day here in the world of volatility. Lots to discuss, lots to go through. Just a funness abounds, I would say.
Funness abounds. I like that. Creating new terms here on the show all the time. Maybe that's our title. Who knows? Funness abounds. Do you think funness is abounding in the market right now, listeners? Let us know. And also joining us, holding down the MIAX hot seat today, I'm pleased to say, return of an old friend. He hasn't been on VolViews in a little while. He is the flow master himself, Mr. Henry SCHWARTZ, the founder over there at Trade Alert, a.k.a. one of our go-to sources for our options data. In fact, I instructed our team, when I heard the flow master was coming on today, I said we got to go all Trade Alert, at least as much as humanly possible on the show today. So pretty much most of the data we got today on the show is generated in some Trade Alert related capacity. So Mr. Flowmaster, I should say, welcome back to Volatility View, sir. It has been too long.
Hey, Mark. I'm happy to be back as always. And the funness is abounding, I guess, if you have to redefine funness in the current lockdown world that we are operating in, but there's certainly a lot to talk about in the markets, and I think everybody that I know in this business and the trades is very thankful that, kind of what we do for a living is still doable. And it's funny to be in the MIAX hot seat because I put a post up on LinkedIn yesterday of a gigantic condor that traded on MIAX with a picture of a gigantic condor, the bird. So it's all, the timing is perfect, and I'm happy to be here.
Timing is always perfect to have the Flow Master, and it's always perfect to do a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do exactly what it says in the description there. We review some volatility, the week that was and indeed has been on the trading, the developments, the unusual activity fronts, all the fun stuff that makes up this universe of volatility. And coming into the end of the week here, it's kind of a mixed end. Well, not so mixed anymore. It was mixed. A mixed end to an overall pretty mixed week. It's been another weird one. I mean, just put that check mark in the box pretty much every week now on the show. Another week, another weird week in the market. It's kind of just par for the course these days. It seems like the market overall is kind of having a hard time coming to grips with a couple of diametrically opposed things going on in the world right now. Of course, we have pretty much a week slate of earnings coming in outside of a few exceptions and no guidance being given for going forward, which is always an interesting time. We've got a dire economic outlook coming out of places like the Fed, which spooked everybody earlier this week. We have the White House saying that, what was the quote there? 100 trade deals wouldn't be worth the coronavirus, so maybe picking a little bit more of a fight with China. It seems that's probably only going to grow as the election grows near. The market doesn't they want that détente. They don't want that exacerbation of trade tensions out there. So in the midst of all this, other weird, dire data, Open Table coming out saying they expect fully a fourth of all the restaurants on their service to never reopen again. So that entire sector looking like it's going to be decimated for the foreseeable future. In spite of all this, we're seeing this weird back and forth struggle as the bull continues to try to make itself known. In fact, yesterday we saw a sell-off, then the day was kind of mixed, and then we ended the day up. Now we're seeming like we're playing out that same script again today. The day started off mixed to biased to the downside, and now coming into the start of the show here, we're seeing that old green genie taking over pretty much all of the indices. Pretty much everything is in the green today. We've got S&P is the laggard, only up 0.1%. The Dow up almost 0.2%. The NASDAQ up about 0.33%, so pretty much right in order there. Then you got gold and crude getting a lift. WTI threatening the 30 handle out there today. Crazy time. So a lot of things going on. Of course, our old friend Spikes and VIX Cash also firming up this week as well, as we've seen a little bit more vol get introduced out there. Spikes coming at showtime is at about 33. That puts it up almost 3 points from where it was this time last show. VIX Cash right around 32.5. That puts it up about 3.5 points from this time last show. And our old friend VVIX, a.k.a. the volatility of volatility, how much vol is actually moving and shaking out there right now. That's up quite a bit because vol's moving. It was a little bit south of that 120 barometer I always like to throw out there. Now it's well north of that. It's up. It was over 140. Now it's up about 136. So up about 20 points, almost exactly from where it was this time last show. So a lot to unpack. We got the Flow Master here, so let's toss to him first. Mr. Schwartz, a lot's been going on out there. I know you've been pretty busy probably parsing a lot of fun stuff as well. What's been going on? What's been catching your eye in the volatility space, sir, over the past few weeks?
Well, it's been a kind of remarkable year. And, last week the market was up hard, right? Everybody was talking about how we'd bounced 50% off of the March lows, and that was almost kind of exactly what everybody was looking for when they were talking about how crashes are followed by a retracement. And on volatility, we saw after VIX took its time coming down from off of that 82 all-time record, but was hanging around in the 50s and the 40s, and then finally last week we were out of the 30s and into the 20s. But it kind of seemed to be pretty brief, and this week. I feel like things are kind of reflecting the uncertainty that this whole COVID crisis is for people, which is there's days where people are jumping right back in and they're like, man, these are the discounts we've all been waiting for. And then, last week was really like that, right? And then this week it's been much more, I think we have 2 up days and 2 down days, and today's looking like it's pretty flat. And vols back basically into kind of the low 32 level for VIX and for spikes. And, it kind of feels like we've hit a weird equilibrium there, and we're going to hang out while, the country kind of sees how this, reactivation of the economy is going to go. So I think it's a really interesting time, and in the single stock and the ETF world, you've got this wild moves where industrials are getting beat up, and technology names, you're still hitting some new all-time highs, and then you have the consumer names and the airlines. It's just there's endless amounts of data to dig into. Obviously we focus on the activity and trying to make sense of it all. And, after the insane amount of volume in the first quarter, things are still really strong. I mean, we haven't seen a day under 20 million contracts in weeks. And, there was no OIC to go to this year, but, the all-time record, which we said in 2018, which everybody made a big deal about, was 5.1 billion contracts for the industry. We actually could see we could see 7 billion contracts this year. We're hanging out in the 6.9 billion pace, and as we get towards November, I think things are going to stay really busy. So the options market is insanely busy, and then on top of that, you have the people operating without the floor for the first time, for an extended period without the floor for the first time in forever. So it's a wild time to be involved in the market.
It's funny you mentioned that, breaking the records, because you're right. We just talked about that not that long ago. Coming into the beginning of this year and the beginning of last year, everyone's saying, could we possibly beat the absurd levels that we saw in 2018? And I always said, be careful what you wish for, because look what it took to set those levels in 2018. We needed the VIX-ocalypse, the VIX-mageddon in February, where we lost products like XIV and tons of capital was wiped out. And then we needed a second shock around October of that year as well, and a huge downturn that lasted all the way to the end of the year. So we needed a couple of really large systemic shocks to generate that much volume. And I said it was going to take something of commensurate, if not worse, proportions to generate more volume. And lo and behold, along comes the pandemic. So one of those things that definitely be careful what you wish for out there, because options volume is a good thing. I don't think anyone wanted it in this scenario, yet it sometimes takes these dire circumstances to really bring out the volume. And you're right, all this happening in a fully electronic market. Who would ever have imagined such a thing? Just even a year and change ago, back when we were hitting these levels, back in 2018. Mr. Meatball, same question for you, sir. Obviously, it's another one of these weird kind of mixed weeks. Depends where you're looking, what you're seeing from an overall vol perspective, but it certainly is an interesting one. I think, as you said, the funness abounds. What funness came across your radar this week, sir?
This is a weird couple of days. We're now on 3 days in a row where we've started off really ugly and then have since rallied. So I'm really kind of fascinated to see what today ends up looking like. We had Wednesday where we opened really, really ugly. Looked like the market was going to really completely fall apart. We're down, about 3% on the low, and it got bought on the close. Then yesterday, opened down, gets bought, end up over 1%. Today, we're down 1% on the open. It's getting bought again. The intraday volatility that we're seeing is not to be underestimated. It's over 2%. So when you look at the VIX of 30 and say, boy, that seems expensive, you got to ask yourself, is it? And the answer might be no. So that is one of the major things I'm paying attention to. I'm also, a little shout out. Our friends, the Thompson twins, did launch their ETF yesterday, I believe. It is, for those that want to know what it is, it's their dynamic alpha volatility trading ETF, and it's a great little product. I believe the ticker symbol is MSVVX. So I don't know what the S is for, kind of wondering what that one is, but it is, MSVX. That is the Thompson twins. I believe that stands for Mike and Matt look something alike very exclusively.
I thought it stands for Mark Sebastian Volatility Fun. Is that what it stands for?
Yeah, it's Mark Sebastian told us what volatility to trade is what that is.
Yes, that's exactly
MXBX. But yeah, so you guys have heard them come on a lot. They're smart guys. They're good guys. If you're interested in Tuluming or mulleting and don't want to do it yourself, I believe that is what that ETF is trying to accomplish. So, congrats and hats off to them. We'll get them on sometime soon. But that is the other big piece that is I'm paying attention to, along with, I would say that I could sum up this crisis in one thing. It would be yesterday I was walking my kid, and an 11-year-old drives by on his bicycle, and he's got a protective mask on. Good job. And then he's got no bike helmet. And I said, oh, well, maybe that's kind of what this market is like right now. I don't know. But I think that I'm really fascinated to see what the price action looks like next week when expiration rolls off. We've had 3 days in a row, like I said, of things getting bought. What does next week look like? I think that is really going to be key, as expiration can cause some funky trading. If we see more of this on Friday or on Monday and Tuesday, then I'm going to have to kind of rethink things. But right now, it feels like the market is seeing an uptick in realized volatility, which always makes me think that we're going to go lower.
I like that analogy of the child. So you're saying effectively that the market is pricing in the sensational risk versus the much more likely risk of us crashing and knocking our head open. That's what you're saying, sir?
Yes, that's exactly right. I think that right now, if you look, we're hedged, puts at the $1,500 strike are really expensive. I think some of the stuff that's closer to the money maybe isn't. So I think that's a wonderful conversion of my idea into an actual palpable analogy. Good job, Mr. Longo.
Well, I get paid to speak, so it does help sometimes. Sometimes it falls apart, the analogies, but once in a while they hold. Let's see what's holding out there in the old options front. Let's kick it off. Actually, before we get to that, let's get to the futures side of the fence, because as I've said many times, the answer to all of your volatility questions is lurking somewhere in there in the VIX futures term structure. By the way, it is exciting now to know that you too at home can trade a mullet or a Tulum from the safety and security of your own desk. Just clicking on that button on the Thompson Twins ETF. I'll have to get them on to have them break down all the nuances therein, but they should call it the mullet and the Tulum. How sexy would that be? The volatility mullet. Just hit that button. No, I feel like a Tulum today. That would certainly be fun. Let's see what the futures are up to today. It looks like for the most part coming at showtime we were we said this before now, back to the quote-unquote normal contango, but it was getting a little firmer there in the front. That cash and that front future are kind of doing a little bit much more of a dance than they were in recent weeks. Again, showing kind of just how firm that front portion and indeed how crazy that cash is getting in there. Coming into showtime, there's only about a quarter to a third of a point difference between the May future and the cash. The cash was about a third of a point below it, and we saw that June future was about almost a full point, about 0.9 above where the cash was trading. Mr. Meatball, anything exciting catching your eye out there in the VIX futures term structure, aside from the prospect of one day trading your own mullets and Tulum, sir?
I think the flatness is really the fascinating piece. It is. I can't remember the last time the curve was this flat for this long. The back end of the curve has had a big bid, and I think the volatility of the front end has been really fascinating. It is. We've seen May and June and July really flying around with VIX. The VIX was threatening to break 25 this week, then was threatening to break 40, and now it's right back to about where it opened on the week. So, again, there's been a palpable and real uptick in realized volatility, and if you aren't paying attention to that, then you are missing the forest through the trees.
Let's see what we're missing from an overall options volume perspective. Coming to Showtime, let's look at Spikes Land first. OI, pretty similar to what it was this time last week. The big positions out there in Spikes options this week again are the June 95s, followed by the July 24s, the June 75s, and then my favorite, the July par calls, rounding out the top there in Spikes Land. Mr. Henry, since you are in the MIAX hot seat, if you have any thoughts on anything that's going up, either at Spikes Land or, of course, we're just talking about VIX futures, if you have any thoughts there as well as, of course, I saw, you're right, very, very timely. Just a few hours ago, you posted a huge write-up about a size, pretty massive, actually, XLF Iron Condor that went up also, coincidentally, over there at MIAX. If you want to break that down for us as well, have at it, sir. A lot to unpack there.
Sure. So I don't look at the futures as closely as I watch the options. And I don't have any real input on what's going on with the Spikes futures evaluation at the grain exchange. But I mean, I do know that volatility products, although we had some pretty amazing volume for a few weeks there in March, things are definitely subdued. I believe it's on the futures and the options side, in a large part because the community is used to trading with the floor. We're still seeing some decent sized trades go up. I think last Friday there was a 50,000 by 25,000, 1 by 2 in VIX. So there's a few things that still print, but I've talked to a handful of desks about how they're adapting to life without the floors, and now we're getting some back. ARCA's open, Box's floor is open. And Amex is opening a week from next Tuesday. But putting up these enormous institutional blocks electronically is a little bit nerve-wracking. And also you have the issue where a lot of these blocks are prearranged crosses, right? So they've lined up the seller and the buyer, and using a crossing mechanism or an auction facility for those crosses, you don't quite have the executing desk does not quite have the control that they do when they have a guy on the phone and they can say, hey, how many am I going to sell? And, they can kind of nudge things as they need to. So, one of the other posts I put out on LinkedIn had to do with order sizes getting smaller. And that's been a trend for a few years, but it got pretty extreme last month. The average order size was 8 contracts in our markets, okay? 8 lots. We were seeing, trade counts up towards 3.5, 4 million trades a day, with an average size of 8. That's an incredible difference from several years ago when the trade count was more like 1.5 million and the average order size was around 12 to 15, really consistently. So that's coming from a few different angles. One is just more algos and smarter algos, and that's probably a healthy thing. But when some of the big institutional blocks are not being put up because of the fact that they really need a floor to kind of baby that order, those orders are either turning into OTC trades, which is certainly not good for us, or the customer's just not doing them.
Henry, I can tell you, talking to some of the SPX guys, that since it's gone on electronic, it's a lot of these trades where they get the cross set up and the market makers agree to put up the whole thing at a price. There are some electronic guys trying to come in and penny it at the last minute, and so these trades get taken down. I know there are some players that are, not helping the situation in terms of getting these orders and trades done at a specific price and helping with price certainty. And I know for a fact that a lot of bigger traders are looking forward to, and funds are looking forward to the floor getting open again to get some certainty. I've also heard that a couple of the firms that specialize, shocker, Mark, you're going to like this, and you will too, Henry. A couple of the firms that specialize in high-speed electronic trading are petitioning to keep the floor closed until we get in Illinois to phase 5. And meanwhile, everybody else in the world is like, get that floor open. It's pretty stunning what's happened to SPX. You got to say, if there was a loser out of all of this, it's SPX has seen a chunk of its volume siphoned off by SPY, at least temporarily, because guys don't want to have to deal with some of the shenanigans that is going on what it amounts to a new all electronic market, right? This is some of the stuff that you see going on in SPX is this type of stuff that you expect in kind of a brand new entity, not in, one of the most active contracts in the world. But yeah, and the other piece, you're right, is it is going OTC. There's been a large uptick in OTC option trades because guys don't want to get pennied when guys build a whole portfolio of trades. They give the customer that certainty. They give the customer that fill. They don't want to see it get pennied because, one, it makes the broker look bad, and two, the customer doesn't want that. So we've seen a lot of flow move off the floor, which is not good for anybody.
It's funny you guys should bring up trading floors. I'm going to cheat and bump up some listener questions that we have on this exact topic because they are pretty much germane to what we're talking about here. First off, Playbook 3 asks, what impact do you think floors opening up again will have on volatility? Then we have a related question from Nelly, wanted to know, do we think the VIX would have ever made it to 80 if the market wasn't fully electronic? So a couple of interesting things. Of course, we've seen some new wrinkles in that discussion since the last time we were all together. We're seeing some actual concrete dates. I believe CME has a date. I'm not sure if SIBO has a date yet. But, of course, as you mentioned, Mr. Meatball, SPX is kind of like the poster child for a product that needs a pit. The ADV is down to around 1 million. That's one of the things we were talking about when all this electronic madness started, was that it seemed like SPY was going to siphon off a lot of that flow. And it certainly seems like that is the case. And you have to wonder if some of the institutional players who've been forced, maybe holding their nose to put up stuff in SPY, if they found a way to make that work for them, if that volume is going to accrete back to the S. So over time, interesting stuff. But let's touch on these listener questions because they are kind of germane. Mr. Schwartz, we'll start with you. 2 questions here. First off, Nelly, do you think VIX would have made it all the way to 80 if the market wasn't fully electronic? Would the pits have stepped in and saner heads would have prevailed? And then also, Playbook 3 wants to know, what impact do you think the floors opening up again will have on volatility, sir?
Well, I think that the VIX got to 80 because of some liquidations, and I believe that the SIBO didn't close until after that, right? That was on March 16th. I think the SIBO closed around the 23rd. I'm pretty sure. Maybe I'm wrong. I might be wrong. But I don't think that having a floor would have helped that situation. There was. There just was no real good market for volatility. I was showing off some. I'm sorry, it was March 13th that it was the last day of the floor, so we were closed when it hit 82. I think that you just had such a shock that you lost your sellers, and you had some liquidations, and in a liquidation situation. If you've ever watched one, prices don't really matter because the firm doing the liquidating, they just buy them. They don't really care. So I was complaining about bid offer widths in March to somebody, and they said, listen, the fixed futures were effectively 20 or 30 points wide. Like if you really needed to go buy some or go sell some, it was going to move 20 or 30 points because there was just no liquidity because everybody was panicking. So, that happens every once in a while. And it was, the most interesting, this year has been a really great example of, the weird things that can happen that, that nobody tells you about. Mark, I'm sure you've got plenty of these, after hours moves that are ginormous, that change the whole exercise equation. Pricing that you expect to be, a couple pennies wide, blowing out, spreads trading inverted. We saw all of this in March. So I think that this market has done an incredible job adapting to having no floor. I agree that certain kinds of business weren't really comfortable without a floor. I mean, I had a a great broker on the Amex tell me that she was seeing electronic orders get pennied, like getting pennied by 3/100ths of a penny on a 5,000 lot. So the problem is that when the big institutions match up a certain, they position some trades and they also match up some trades with other clients. And it screws up that whole dynamic, because if you tell one client, hey, we're going to buy 5,000 of these and you can sell some and the price is going to be $3, and then you have to throw it into an auction mechanism and the price turns out to be 2.993, then your seller didn't get any and he had no chance to lower his offer. And you're in this situation where you're like, well, maybe we need to put in the order at 298 to make sure that we match up the trade. Like the price discovery gets a little bit screwy. And I was on a call with some regulators and some market makers, and I kind of was pointing this out. And one of the market makers said, well, and Mark, this is probably one of those guys who was like, we don't need floors. He said, well, gee, the customer is getting that price, $299, is a heck of a lot better than $3. So isn't this a more efficient marketplace? The floors are actually impeding the efficiency and the better pricing. But everybody in the business knows there's an ecosystem, right? There is there's risk management and warehousing of risk, and almost a kind of a syndication of risk where the trading desks and clients and market makers are all together, kind of fostering this environment where people can do this very efficient risk transfer of very large amounts of capital. And when you start kind of enabling the ability for somebody to penny a trade at a fraction of a penny, then all of a sudden, that means that the risk warehousing ability, basically the negative selection problem becomes worse for certain participants. And so then they don't want to trade anymore, right? Then that absolutely pushes flow into OTC, because if they say, well, look, the only way we can capture this trade or match up our two clients is OTC, they can get most customers at the institutional level can trade OTC. They don't necessarily like to all the time. There's big advantages to the listed product, but this is a situation where there's some disadvantages, and they were made worse by the lack of
and there's so much value added by those guys that match things up. So that market maker, what he's trying to do is squeeze things out so he can widen things back out. Take a look at what's happened to the bottom 500, the bottom 2,950 stocks, and tell me how that has improved with the floor disappearing. The liquidity on anything that is in a weekly or the front month has dried up, and anything that is in a top 30 stock has completely dried up. There is no liquidity in any of the old, anything that was even a B stock doesn't really have a lot of good liquidity anymore. And the reason being is that those tight electronic markets, that pennying, that picking off, gets rid of the competition, and then you widen out your prices. The other piece, and this is something people don't think about, and this is where it is bad for that customer, is that this broker being able to collect commission on both sides, being able to match things up, giving both sides price certainty. Do you think that institution cares whether he gets $2.993 or $3? He could give two what on 7/100ths of a penny. He does not care. What he cares about is getting the entire trade done and getting it done orderly and all at once. And the broker being able to get that matchup, being able to put all the sides together, is now in a position where they can do things like facilitate a trade for that customer when he needs it at a middling price that they're having trouble matching up, that allows their desk to then take part in more of the more richness of that order flow. And so what you really have is these little pirates, these high-speed pirates, that what they want to do is pick off all the good paper and leave all the crap paper out there. And it is way, way, way worse for the customer long term. And so, hopefully the exchanges are smart enough to recognize that. I think they are. One of the things that I do like about SIBO is that Ed kind of sees the CEO of SIBO, at least from a value of the floor perspective, does see the value there. Even the MIAX guys, who they don't really have a floor, they're all floor guys, and they understand, I think some of the value in what goes on there as well. So, I think that any market maker that's pushing to get rid of the floors probably does not have the customer's best interest in mind. Truthfully, no market maker absolutely has the customer's best interest in mind, but having a lot of market makers in a centralized location long-term is way better for the customer than having 4 or 5, having IMC, Susquehanna, CTC, and Citadel fight it out fight out for the good paper and ignore all the bad stuff.
So I guess we can put Mark down firmly in the pro-floor camp, at least when it comes to responding to our listener questions. That scenario you're setting up there, Mr. Meatball, is very reminiscent of the early days of the RAISE system and the RAISE bandits. If you're not sure what I'm talking about, listeners, RAES, Retail Automated Execution System, I believe, is stood for. Look it up. Look up the RAISE bandits, and you'll see what I'm talking about. But there's a lot of that going on as well. People trying to jump in front of these crazy small retail orders, and then at the time, very new electronic options environment and all the havoc that ensued there. And I remember firmly standing in the crowd and getting hit on a quote that was supposed to be for a small retailer, instead of getting 10 fully 100 Delta calls getting shoved in your face that were fully against you. And the fun of the RAISE bandit. Sounds like we got a little bit of that going on with Henry alluding to sub-pennying. Say that 5 times fast. Going up out there. We could sink our teeth into more of that, but we got to sink our teeth into some volatility options flow. Let's get on out to VIX options land to start now. Coming into, as of a few minutes ago, we saw about 410,000 contracts on the tape. Again, by the way, at least as many of today's stats as we could humanly squeeze in today, coming at you courtesy of the Trade Alert platform. Check out what the Flow Masters got cooking over there, tradealert.com, to learn more. It's about 410,000 contracts. The ADV is about a little bit north of 300K right now, which puts it well over 1 million contracts shy of where it was at the height of the madness when, as our listener alluded to, VIX was crossing 80 and dogs and cats were living together and it was mass hysteria. The overall top positions in VIX land actually kind of light for the number 1 spot. Doesn't cost you much to break into the number 1 or even to the top 10. But overall, open interest is actually pretty strong, showing perhaps a bit of a diverse opinion going on out there in terms of a lot of strikes trading as opposed to just a handful out here. Coming into showtime, cost you only about 101,000 to break into the top 10 in VIX land. That gets you to the May 40s. Number 9, $113 of the July 28s. Number 8, 113,000 as well of the May 35s. Number 7, $115 of the May 60s. Number 6, 118,000 of the June 15 puts. By the way, those were 35 puts in May. I said for number 8, by the way. Number 5, 119,000 of the May 32 halves. Number 4, $128 of the May 28s. A lot of calls on the list this week, listeners. Only 4 puts in our top 10, including number 3, 132,000 of the May 30 puts. Number 2, $132 of the May 32 half puts. And number 1 with a very small, a 22 caliber bullet this week, are 153,000 of the May 35 calls. Just for some frame of reference, it usually costs you about that much volume to break into the top 10, not to take the number 1 spot. So things a little light, but overall OI actually is pretty strong. Almost 9.5 million contracts open out there in VIX land right now. Puts it at about 5 million contracts to the calls and about almost 4.5 million contracts out there to the puts. So calls slightly winning the dance also when it comes out there to OI. A lot of that probably accreting over the course of the past week, as we saw a little bit of firmness sneaking in to the vol landscape. Coming into today we said about 409,000 contracts, on pace perhaps to be one of the more busy, if not the busiest days of the week. Overall, a little bit busier week this week than previous weeks from VIX land. Before I start breaking things down day by day, really quickly, let's start with the Flowmaster, sir. Any interesting VIX options trades? I know you were busy pricing up that crazy condor in XLE, but any interesting VIX options trades come across your tape this week, sir?
The condor did take me a little while because it was a condor, but it was being used to roll a put spread out of the money a little bit. So I actually had to back up and say, okay, where did they get into these 100,000 put spreads first? So, which is kind of what you would expect, but it took a little while to track it back. But that is what we make possible. So that'll be my advertisement.
Welcome to my world, sir, of parsing unusual activity on a daily basis. It's fun, is it not?
It is fun. It is fun. And nobody can ever really say you got it wrong because it's so hard to do that they're going to trust you. And we're good at it. But I have not actually seen any massive VIX trades or even concentrated positions. It's been kind of back and forth, a little bit manic. I do not think that you have too many people that are comfortable selling. There were a few days in at the beginning of April where the put buyers showed up because the mean reverters really did say, well, hang on a second here. Maybe this is a little bit wackadoo. But I think at this point, like I said, it's a little bit of equilibrium. I mean, you got some buyers, you got some upside views involved. You have some downside views involved that are tiptoeing in. And it's just kind of, I haven't seen anything super distinctive. I mean, I know, Mark, Sebastian, do you have any feeling on, I know that Ruffer, the VIX 50-cent trader, kind of said they may be done. But in terms of ratio call spreads in VIX, do you have a feel for what level or in spikes, what level makes that appetizing again?
Yeah, I think that it's hard to set up those ratio spreads when the VVIX is 140. You're buying really expensive volatility, and with vol futures where they are. You've got some spreaders out there, but it's hard to use it as a hedge. You're actually better off going direct now that we've had the move, right? The advantage of the VIX is that I can, buy a 16 VIX and, when it's 13 and the S&P could be 500 points higher and that 16 VIX hedge might work. Now that we've gotten the move, and we've seen the market really break out, you're actually better off probably directly in the index because, we could drop 100 points, 200 points from here, and you're not going to see that big, huge VIX spike. Sans early this week when we got a little bit oversold. Now I look at VIX and I see a pretty fair value. On a close-to-close basis, it's expensive, but if you're looking at kind of intraday volatility, something like ATR, it's not really inexpensive at all. And so, I think that you need to see VIX back in probably sub 20 because, 50 Cent likes to play in with the 25s, the 26s, the 27s. So we need to see VVIX back below 100. And we need to see the VIX back at like 20 before he's going to start getting really interested in what he's doing. And, I got to say, we've seen the other reason why maybe you don't need as much VIX protection is that you have the Fed out there willing to buy any credit, right? It used to be that in order for, one of the only ways to truly hedge credit was with the volatility index. But now that the Fed is out of just buying treasuries and just trading treasuries, you have all kinds of liquidity in the bond market. And folks, you might not know this. The VIX has a giant followship in the bond market because it is a non-correlated hedge. And now that we've had kind of this blowout, there's less demand until VIX gets to 20 and the Fed kind of gets out of the buying any debt that it pleases game, and who knows when that'll be.
Who knows indeed. What we do know is that overall it was a decent week for VIX options, but not exactly blowing the doors off. Like I said, about 410,000 contracts today, 443,000 on Thursday. Wednesday was the big day of the week, 612,000 contracts on the tape. Tuesday, about 387,000. Monday, 422,000. We could parse some of those, but I want to get on to some of the other names that are lighting it up out there right now, as well as some of your questions in the crystal ball. A lot to squeeze into an hour, listeners. Let's get on out to VXX. Coming into Showtime, this was a product that we were talking about. Hey, maybe that return, at least what we saw last week or so, or maybe a couple of weeks ago, really, with the return of that healthier contango to the front portion of the VIX futures curve. Maybe maybe you could get what you guys want out of VXX, which is squeezing that juice out of it. And let's see, coming in, of course, for a while there, it seemed like that was happening. And we saw it firming up again in the front month out there in the futures. And that, of course, not exactly the recipe for a lot of upside in VXX. We did see a VXX spike to close to 40, around that level, coming off a little bit of that now. It's about 37 and a half, actually about 37 and a quarter right now. Puts it up almost exactly 2 handles from where it was last show. So still up. So all of you out there who are loving the fade, not feeling that love today, come into Showtime. We saw about exactly 100,000 contracts on the tape out there in VIX land with an ADV just shy of 250,000 contracts. Let's just do a quick top 5 out here. Number 5, the June 23 puts, 54,000. Number 4, 55,000 of the May 25 puts. All puts here, all the time, listeners. Number 3, 59,000 of the May 24 puts. Numero dos, 59,900 of the June 20 puts. And number 1 with a bullet out there yet again this week, 103,000 of the July 35 puts. That's still the strike du jour out there. He's hanging out. He's waiting. He's been teased a couple of times now of getting close to that 35 strike, and then it bounces away again. Let's see if he can make that happen. Total of about 2.75 million contracts outstanding out there. Today looks like the big prints out there coming about almost 5,000 of the May 39 calls and about 4,200 of the May 37 puts. Let's roll on out to earnings land really quickly. Again, a lot of these reports coming to you from our friends over there in ORATS land. So you can check them out, theoptionsinsider.com, the place to go. Or just head on over to ORATS, ORATS. You can see all these reports for yourselves in a lot of great detail. There's the earnings move results, and then the earnings season reports. So a trifecta of reports for you guys to sink your teeth into. And they're updated all the time. So you go to our site, you should be able to find the latest version. Let's get some of the latest move results right now. Coming into it, we had Cisco. Looks like they were earlier. They were the 13th after the bell, a.k.a. Uncle Mike's nemesis out there. They closed at about almost 42, 41.95. They were pricing in about 5.5%, and they delivered about 5.2%, so slightly light from an overall earnings volatility perspective. Also, Wix, they of the website development infamy out there, they're closed at a fairly rich 166.20. They were pricing in 8.6%. They delivered 6.7%. So also another name under delivering from an earnings vol report. And let's see. Yesterday actually coming up on the 19th after the bell, we have Urban Outfitters. They were trading at $15.75. They're pricing in about $1. And in the past, they've moved about 86 cents. So a little bit rich out there. A whole bunch of names there for you guys to parse. Again, check them out. TheOptionsInsider.com. We could fill the whole hour with tickers, listeners. Make sure when you get over there, check out the season report as well, because a lot of fun stuff popping off out there as well. Let's see what fun stuff you guys have in store for us with a real quick visit into your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to it. We already touched on a couple of the questions there from Playbook 3 and from Nelle about the impact of the trading floor. White Yard, sounds like he's listening live. He's chiming in on what the Meatball was talking about. And Kramer talking about Mark's analysis earlier this week. He chimed in and say, that the inverse of Kramer is always right. So it sounds like he's perhaps fading what Kramer has to say. Tim wants to know, how is the earnings season shaping up? Well, luckily for you, is that report available for you completely free? TheOptionsInsider.com. If you go there, I believe the most recent update is from yesterday, May 14th. So a lot of data points in there for you. It goes all the way back to April 10th of this current season. And let's see, coming into week 5 right now. Week 1, we saw underperformance from a vol perspective. The delivered moves about 95% of what was priced in. Week 2 was a paltry and anemic 61%. Week 3, getting to the outperformance land, about 103%. So a little bit more movement than was priced in. Number 4, 112%, so more outperformance. And this past week was the most outperformance yet, 137%. So interesting. A lot of that probably due to the fact that we have seen a lot of names pricing in slightly less vol than previous cycles, which is somewhat counterintuitive given the fact that we're all facing a gigantic unknown right now looking into the future. So probably some of those latter moves having to contribute to that. You can check all that for yourself. Historical week averages, number of firms reporting, implied move, all that stuff. You can check all that out for yourselves over there at theoptionsinsider.com. But that gave you just a quick overview of that, Tim. Let's see. 56 IT wants to know, what is the status of SVIX? SVIX is the much ballyhooed replacement, I guess, surrogate for XIV. I haven't heard much new on that front. I'm guessing right now not exactly the best time to get a new product approved, given all the other madness that is going on out there. Mr. Henry, have you heard anything about SVIX, and do you have any thoughts in general? We haven't had a chance to talk to you about this. What are your thoughts in general of a product trying to dump back into that inverse vol space, sir?
I think that there is a need for some of those products. You know, it's one of these things. I think that once the memory of the pain goes away, they will sneak some in. Same thing with some of the triple levered products. There are people that understand them and that use them for what they're there for. I think unfortunately it kind of falls on the brokers to educate their clients about it, and that's very hard to do because you run into situations where they don't want to be making recommendations, and so they tend not to do much of a good job at that. So, but I think that these kinds of products, they have a place and they can be dangerous, but just like all most powerful tools, they can be very useful too.
Mr. Meatball, what are your thoughts? Have you heard anything from our listener here whose name escapes me? Where is it? 56IT. Have you heard anything about the status of SVIX recently, sir?
I've talked to them a couple times. I know they're still trying to get it launched. And, Henry, I've always thought that these products are essentially kind of embedded option products, right? So maybe what you really need in order to trade these at a brokerage or own them at a brokerage would be, like level 3 option clearance. I think that would be the way I would kind of take this, in that, if you have a general understanding of straddles and strangles and how option and the leverage in options, then these don't become so confusing. It's when the retail trader who thinks it's an ETF buys it because they think it's an ETF that we see those problems. So I would actually take all these levered products and lump them into level 3 option clearance if I was running a brokerage firm, because that's kind of the most similar to what they are. But I know they're still trying to get it launched. I think they're lucky that it got delayed a little bit based on what just happened. And when it lists, I think that if and when it lists, I think that it'll be an interesting time to be on board.
Yeah, we've heard that approach from others, including in the brokerage space, who say they think if these products are going to return, they need some sort of, whether it's level 3 options clearance or whether there needs to be a separate certification, but something analogous to that for these kind of inverse and Franken ETPs that are floating around out there, because clearly there needs to be a little bit more education done on that front and a little bit more certification on the brokerage front. So maybe they need to have, you have to have a level 3 options count, a way around it. You don't need to create a separate certification, but there probably needs to be a few more impediments put in place between people and clicking trade on some of these products that they clearly don't understand. Let's see if we understand volatility now. It's a dangerous one this week. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is indeed the portion of the program where we get difficult, we get dangerous. And this is another difficult one this week here, listeners, because coming to showtime, as of right before the start of this segment here, we saw VIX cash at about a 32.25, and we saw the spikes at, actually ticking down a little bit, about 32.18 or so. And then we saw the spikes at, about 32.62. And if you recall, listeners, I was feeling a little bit higher than my pick last week, but I let Mr. Meatball go before me, and he picked kind of where I wanted to be, which was 32.32, which is looking pretty good. It's about a third of a point away on the spikes land, and it looks like about 0.15 or so on the VIX cash land. So I ended up being a charitable folk, saying I didn't want to squeeze Mr. Meatball too much, so I moved my pick down to a 31.5. Charitable, nice guy that I am, and that looks like that cost me this week, listeners. So it would have been in that beautiful, sweet, sweet bullseye territory. Still, technically, I am within one handle, so technically I am within that conversation, but it's like the Meatball scumbagging me to the upside there. Tom from the MIAX hot seat going at a 27.5, so he was feeling a little bit more erosion. Myself and the Greases Meatballs are feeling a little bit more upside here. So, Mr. Meatball, with a heavy heart, I have to give you the victory this week, even though it's kind of like a symbolic victory for me as well. But that said, I'll let you choose. Do you want to go first, or do you want to pick someone else to go first?
Well, I would say that I'm about as close to a bullseye as you can get. But I'm going to give it to, I'll let Henry go first since he's so smart and handsome and good looking. And we always let that person go first.
Smart and handsome and good looking. Well, there you go. That's a setup. Mr. Schwartz, you have been given the dubious honor of going first, sir. What are you feeling for this time next week from a VIX cash and a spikes perspective?
I'm going to go 35 in VIX and 36 in spikes.
35 and a 36. Interesting. I also would allow one number as well. We could apply it to both. That makes it a little bit easier. But you want to go two? I like it. I like the spirit. Mr. Meatball, I'll let you choose again. Do you want to go second, or do you want me to go second?
You know what? I'm going to step in front of you and trade.
How did I know? Are you pennying? Are you 700th of a pennying me?
I just, call me an electronic trader. I just pennied you. I think that next week we're going to see the VIX trade over 40. If Henry hadn't gone first, I'd probably be about where he is. But since Henry got to go first, I'm going to go a little bit higher than where we are, and I'm going to say 33. 33 for the Meatball. I think we're all feeling that same little bit of inhale, to use the technical term, out there in the volatility space. And I'm like you. I was kind of feeling around where Mr. Schwartz was feeling as well. So I'm going to go a little bit the opposite way. I'm going to say a little bit more. I think we're going to retain. I also feel like a nice spike, pun intended, in between now and next show. But I think we'll retain more of it than you're feeling. You think we're going to fade down to 30. I think we're going to keep it around 37. I'm going to say a little extra. I'm going to say 37 and a quarter. So there we go, listeners. 37 and a quarter for me on the upside, a.k.a. the correct pick. Then we've got Mr. Henry coming in kind of in the middle there at a 35 in the VIX cash and a 36 on spike. So he's cleverly given himself two winning picks there out there potentially. Now, and Mr. Meatball bringing up the bottom there, the rare, with a 33 and a third. All right. Unfortunately, listeners, that music means we've come to the end of our journey in the world of volatility. Oh, what a journey it was today. We touched on so many topics. What's going on in VIX and spikes and the options and the futures. What the heck does the floor really have to do with liquidity and volatility and all that fun stuff therein? A bunch of your questions. Talked about SVIX, talked about VXX, all the products you love and more. You can see why this is the premier program for volatility traders. It probably should be like 3 hours, quite frankly. But we have to move on, do some other things there as well. Glad you guys are enjoying it, enjoying the live streams and the after the fact. If you like what you're hearing, again, leave those reviews and those platforms so other folks can continue to discover this. It's been running forever. In fact, I'm going to have a chat with our old buddies, Mr. Bob Krause and Mr. Schlesinger, coming up next week. It's going to be hitting the network. I'm looking forward to that. He of options should be sold or not sold, never bought fame. So look forward to that. That's going to be forward next week. So I got to check in with Mr. Schlesinger again. I haven't talked with him in ages. That'll be fun. The show has been running for a long time, but we always love new folks discovering it. So do your part. Get out there. Leave a review. Keep the new folks coming in. Mr. Schwartz, if folks are intrigued, they want to check out whether you're parsing size, XLE, iron condors, or maybe want to look at some VIX options stuff. Maybe they want to play a little bit with the old trade alert tools. Either they're on the institutional side, they want the full size kit and caboodle, or maybe a more retail sized portion. Where should they go? What should they do, sir?
Come to tradealert.com, trade-alert.com, and ask for a trial. You can set yourself up. We will walk you through things. I'm also putting plenty on LinkedIn, and we're also on Facebook if you search Trade Alert. And Mark, I have to tell you, after listening to one of your, probably number 900, I think, you were talking Volcone, and I resurrected a feature request that I had, which was the historical vol cone as one of our little charts.
Ah, yes.
So,
I'll have to bring that up with Don next week, too. He loves those. He's he got me kicked off on those.
They're cool because it's just, it's just really quickly at a glance. It makes it, to me, it was always a good defensive way to look at things. It's like, oh man, if we're here, I don't want to buy this one. And I'll see if we can get it working in production, and we'll call it the Options Insider Vol Cone. How about that?
I like it because you're right. It's such a simple tool yet so incredibly useful. And so many people don't even do that basic bit of analysis, and then they, let's say, buy a call before earnings, not realizing they're 3 standard deviations above the top band of that cone. And then they write to us saying, how come it didn't work out, right? So just that basic tool alone will save people a lot of money and save us a lot of time and hassle having to answer those questions. You know where to go, listeners. TradeAlert.com. You can go Trade-Alert, but Trade Alert works as well. I just tested it to make sure. Trade Alert, or just type it into your browser, Trade Alert. You'll get to the Flow Masters platform, whether you want the more retail-sized, what's trading size, or the full kit and caboodle of Option Alert. Hey, we use it for a lot of our stuff here. We use it for everything pretty much today, so it shows you can do a lot of cool stuff with it. TradeAlert.com is the place to go. Kick the tires and light the fires, as they say. Mr. Meatball, once I have these cool tools in my hand, I want to figure out what the heck I should do with it, all this vol stuff. Where should I go? What should I do, sir?
Yeah, head on over to optionpit.com and sign up for our newsletters, and you get great daily volatility updates from me and some weekly great ideas as well that I'm putting out. So make sure if you want access to my volatility traffic light, that you are coming to optionpit.com.
Volatility traffic light. I like that. Check it out. He's got all kinds of great tchotchkes there. You got the MAGA and F-MAGA hats. He's got the cool Vol Trading Club jackets and the secret handshake. Maybe not so much with the handshake right now, a socially distant handshake. You get the key to the secret clubhouse. All sorts of good stuff. And now the traffic light. I think you have the Legion, something Legion going on there as well. All kinds of cool stuff. Check it out. OptionPit.com is the place to go. And on behalf of the greasiest meatball, and indeed the Flow Master, and of course myself, and our friends over there in MIAX land, will probably be back next week. I want to thank all of you out there for downloading, for streaming, for subscribing, for sending in your questions, for playing along in our crystal ball, all the other fun stuff that you do. Keep them coming, and we'll see you back here on Monday for the whole network kickoff again on Monday with Option Block and Crypto, all that fun stuff, all the way through to Friday, where we're back together again for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.